This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 17th of May here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Chinese consumption slows as Beijing looks at ways to revive the country's battered property sector.
Fed officials suggest interest rates should stay higher for longer as Jamie Dimon warns of inflation risks.
Plus, governments and companies want green hydrogen to play a big role in fueling Europe. But what if they're wrong? We have a special report.
Let's start with a roundup of our top stories.
Chinese retail sales grew by 2.3% in April, the slowest pace since 2022. At the same time, industrial production in the country rose faster than had been expected. Robin Xing, chief China economist at Morgan Stanley, says the numbers highlight the mixed recovery.
It's largely due to the strength in exports and manufacturing. So production side is strong, but the domestic consumption side is very weak. Property and the retail sales, they both missed expectations. So I think growth is stabilizing, but at very unbalanced pace.
Morgan Stanley's Robin Xing speaking there. President Xi Jinping's government has signalled that more economic help is coming.
Now staying with China, where the government is planning to speak to key officials about helping the country's declining property sector. Bloomberg has learnt that financial regulators, local governments and housing officials will join a Chinese cabinet meeting today to discuss the matter, including a proposal to clear excess housing inventory. A report suggests authorities will announce new policy measures to tackle the real estate crisis. Winnie Wu, China equity strategist at Bank of America Securities, says the government's help is needed.
For the demand side, the key is to make property desirable again, right? Because for the past few years, with this properties for living, not for speculation, home prices being falling, and people are not going to buy a depreciating asset, right? So the key is to change the expectation to make people have the confidence on property price that is going to stabilize or even have room for long-term appreciation. Now, that probably need a strong momentum in terms of a package of policies.
Bank of America's Winnie Wu speaking there. The news comes as defaulted Chinese builder Country Garden begins a major legal battle with a creditor seeking the developer's liquidation today. A Bloomberg gauge of Chinese real estate stocks rose as much as 7% in early morning trading, following an 11% gain on Thursday.
China's President Xi Jinping and Russian leader Vladimir Putin have pledged to intensify cooperation against what they see as US containment. Putin is in Beijing for a state visit, and in a joint declaration the two leaders called Washington's approach destructive and hostile. But JP Morgan CEO Jamie Dimon says that despite growing political tensions, the US should not turn away from China.
I think it's the right thing for America to fully and deeply engage with China, competitively. Every nation is going to do what's in their own interest for national security. So should America. We should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But the engagement is the right thing to do.
Jamie Dimon made the comments in an exclusive interview with Bloomberg at the bank's Global Markets Conference in Paris. The CEO of the Wall Street giant also told us he's still more worried about inflation than markets appear to be.
Well, Jamie Dimon's warning that significant price pressures continue to influence the US economy comes as a slew of Fed policymakers repeated Jerome Powell's higher for longer message on interest rates. Speaking separately, the Cleveland Fed President Loretta Mester, the New York Fed President John Williams and Richmond Fed President Thomas Barkin have all been arguing that it may now take longer for inflation to reach the bank's 2% target. Now, here is Loretta Mester.
Incoming economic information indicates that it's going to take longer to gain that confidence. So holding our restrictive stance for longer is prudent at this point as we gain clarity about the path of inflation.
Mester, who votes on policy decisions this year, says that it's too soon to say that progress on inflation has stalled. The comments come after the data released on Wednesday showed a measure of underlying US inflation cooled in April for the first time in 6 months.
Ping An is weighing options that would allow it to reduce its $13 billion stake in HSBC. Bloomberg has learned that the Chinese insurance giant wants to lock in some profits from its 8% stake in Europe's largest lender. Ping An has had a contentious relationship with HSBC in recent years as it campaigned for the bank to embark on a series of reforms, including spinning off its Asian arm.
Well, to the UK, where Chancellor Jeremy Hunt will pledge to reduce taxes if his party wins the next election. Hunt follows both major party leaders setting out their agendas for a general election earlier this week. Bloomberg's James Wilcock has more.
Jeremy Hunt knows the Conservative Party has a problem. His main rivals in Labour poll better on the economy. So the Chancellor wants to stress how the government have handled a pandemic and point to tax cuts that would come if his party were re-elected.
We want to bring down the tax burden. We want to bring down overtime when it is affordable and responsible. We want to bring down employees' national insurance to zero. That is a very clear aspiration.
That was Jeremy Hunt last week. But with Labour more than 20 points ahead in the polls and Keir Starmer making stabilising the economy his first job, the question many, even in Hunt's own party, are asking is, can the public be won over? In London, James Wilcock, Bloomberg Radio.
The world's super rich club now has 15 members with fortunes over $100 billion, the most on record. The story from Bloomberg's Charlie Pellet.
They are riding the waves of artificial intelligence, luxury goods, and geopolitical shifts. According to the Bloomberg Billionaires Index, the combined net worth of these people is up 13% this year to $2.2 trillion, beating the pace of inflation and the broader stock market. Between them, they hold nearly a quarter of the wealth of the world's 500 richest people. In New York, Charlie Pellet, Bloomberg Radio.
And those are a few of our top stories for you this morning. I think I'm going to have to get used to saying the word centi-billionaire.
In a moment, we'll dig into that Chinese economic data and discuss why Europe's push to harness hydrogen as a fuel source might be in trouble. But another story that caught our eye this morning about the value of celebrity memorabilia. It's now so big that there's an auction house that specialises in this. It's called Julian's, and it's opening its first office in Asia to try and cater to demand there. So they were notably involved in the sale of things like Marilyn Monroe's Happy Birthday Mr. President dress. They were involved in getting it sold to Ripley's Believe It or Not. Kim Kardashian also wore it to the Met Ball in 2022, yes. and they were involved in orchestrating that loan as well. That was a $4.6 million sale for that particular piece of merchandise. But it's something that they're seeing a big boom in that, I suppose, area of the market.
Yeah, absolutely. Look,
$4.8 million, I should say, not 4.6.
Yeah.
Very important to know the value of the dress in 2016.
Yeah, absolutely. Yes, and also, I mean, obviously it was hugely valuable as well to Kim Kardashian, given that it just, the pictures went absolutely everywhere. Look, the whole idea is, and we often talk about alternative investments, art and wine and so on, but apparently memorabilia is now having its moment. And Deloitte's art and finance report showing Asia's been the growth driver actually for this type of luxury collectible. But it's really a very particular type of collectible. You know, it's really got to have like a big name attached, you know, John Lennon's guitar and things like that.
Yeah, I mean, it's the star power that essentially adds the value to this, but it also is a bet on the future value of that celebrity, of whether or not something that they touched 10, 20, 30 years ago is still going to be worth something. It's a very risky investment from that point of view, surely.
Yeah, it is. And I mean, we were having a chat about this earlier. I think it's also to do with people's memory. You know, when that memory is significant and then you get the cash and it's your memory and you want to buy it, then that's when perhaps the memorabilia goes up. And
what happens if someone gets, to use internet parlance, cancelled over something later on? Does the value of that investment plummet? See? Anyway, that's the things that I worry about.
OK, let's get some more details now on the latest round of Chinese economic data, which showed slowing growth in retail sales, but a pickup in factory production. Bloomberg News editor Jill Deesis joins us now for more. Hi, Jill. Good morning. What do these numbers tell us then about the state of the Chinese economy? It really was quite a big data dump.
Morning. Yes, I think that what it's telling us is that this is very much a two-track recovery, and we are seeing a pretty substantial imbalance between supply and demand. As you said, on the one side, you're looking at those industrial output figures growing 6.7% in April from a year earlier. That's better than a lot of economists were expected, and actually tracks pretty well with some of the recent data we've seen out of the manufacturing sector, including some pretty solid export growth, showing improvement for April. So all of that, I think, indicates that the manufacturing side of the equation is doing pretty well, the supply side of the equation. But then you look at the demand side, and that's really where a lot of these issues are still continuing to persist. I mean, those consumer sales figures, I think it was somewhere around 2.3% expansion in April. That was pretty significantly lower than what a lot of economists were expecting. That also comes on the heels of some pretty anemic consumer inflation data that we just got recently. So all of that's telling us that there's still these issues within domestic demand that are really weighing on the economy and sort of threatening growth for the year. And I think what that's all pointing to is that there's still a lot of issues within the property sector, in particular in China, that are really, really weighing on demand and sentiment.
Jill, we got this data as China also launched the first of its special bond sales. What did that tell us about investor confidence in the Chinese economy?
Yeah, so actually, I think the issuance of the special sovereign bonds was pretty solid today. So this started with a 30-year auction. It drew demand of almost 4 times the amount on offer. Of course, the sale of these ultra-long special sovereign bonds are going to continue throughout the rest of the year. So this just marks a portion of that. But I think that's obviously some fairly significant news for how this form of stimulus is going to take place. I remember when this was announced back at the beginning of March. There wasn't a massive market reaction, just the fact that, these were going to be issued. But it does indicate that the government cares to a certain extent about building up some stimulus. This is the kind of thing that's usually used for like infrastructure investment, so sort of spurring activity that way. But we'll see how, the rest of that carries throughout the year, but a pretty decent start so far.
Yeah, $1.138 billion US. Jill, thank you so much for being with us.
Let's turn to another story that we're looking at this morning. European companies and governments are banking on green hydrogen to replace fossil fuels. But the dream may have to be scaled back as hydrogen is much more expensive and there's still no proven method yet to safely store, transport and burn it. The danger is if Europe waits too long for the so-called green gas to materialise, it could be hooked on fossil fuels for longer. This is something that our energy transition reporter Petra Sorga has been reporting on, and she joins us from Berlin now for more. Petra, good morning. Is hydrogen being hyped too much?
Yes, clearly. I mean, it is seen as a great alternative for natural gas, which is used in homes and power plants everywhere. So it's a very easy solution just to swap one gas with the other. The problem is that hydrogen has only while the time you're producing hydrogen, you're losing 70% of the efficiency. And of course, it's much more expensive.
So what's the risk if the bet on green hydrogen doesn't materialise? And there is a big bet in Europe on it, isn't there?
It's exactly that. We will just delay the transition that we can already make, like, for example, installing heat pumps or using the renewable energy that's already there from solar, wind and other sources. And waiting on something that still hasn't materialized yet. The IEA has done a research last year that only 4% of the projects announced on hydrogen have actually reached a final investment decision. So there's a huge gap between the announcements and the actual projects on the ground.
Talk to us about how the German government is thinking about this. They're looking at building gas power plants that could then later be converted to hydrogen.
That's a huge trial because Germany, as you know, has switched off its last nuclear power plants last year. It also wants to phase out coal, but you need something when wind and solar are not available, especially in the winters. So they're backing on these hydrogen-ready new gas power plants to produce that energy and eventually switch to full hydrogen by the end of the 2030s. And that means actually building new fossil fuel infrastructure in the next years. Yet there's not yet any government scheme available. We don't know when is this coming. They want to build 10 gigawatts of capacity, which is more than 20 large power plants. There's one such utility in place, which we visited in East Germany's Leipzig. They have the turbine that with a few tweaks can actually run on 100% hydrogen, although there has never been a test yet. They want to do that first test in 2026. Yet they don't have a connection to the hydrogen grid, which is still on the drawing board in Germany. They don't have electrolyzers on site, so it has to be trucked. And then the question is, how safe is that and how especially economically viable? Even the utility did not answer these questions when we went there.
Yeah, and that sounds like a long list of issues. here in the UK, there was also a proposal to try to get people in towns and cities. Redcar, for example, had a pilot scheme around using hydrogen in homes. We saw a lot of protests in the UK. In the end, that didn't happen. What did you take away from that?
Yeah, my colleague Rachel Morrison went to the town where Northern Gas Networks tried to basically replace natural gas with 100% hydrogen. And people were really scared because suddenly on stoves and in the heating boilers, which some of them also had to be replaced, you're having a gas where you don't know, is it combustible? They have to put even fans to make sure there's no danger in the house. People also weren't told about the pricing of hydrogen. If they have to pay for a fuel that's now way more expensive than natural gas, of course that will be dramatic for small households. So eventually, after these protests, the test was called off.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.